Okay. Good afternoon, everyone. My name is Vicente Silva. I am policy advisor with the EU-Tax Observatory. So welcome to the last panel of the first day of the conference, where we will discuss how far we have really come on the transparency road. So these panels build directly into the previous academic panels, but it turns the conversation more on the policy implications of the evidence that was presented before. And we're really interested to discuss on how the transparency reforms have made a real difference, where do the bottlenecks also remain, and what this means for policy design, implementation, and enforcement going forward. So we're very lucky to have an amazing panel here today with us. I think it's a wide range of perspectives that can share the topic. So let me briefly introduce all of you. We have here Philip Kerfs, which is the co-head of the Tax Treaty and International Cooperation Unit at the OECD Center for Tax Policy and Administration. He focuses on international tax transparency and cooperation standards, including the Common Reporting Standard, the Crypto Asset Reporting Framework, and the automatic exchange of information. Also, we have with us Dr. Ezera Madzivanyika. Is the Manager of Research and Statistics at the African Tax Administration Forum, ATAF. He's an economist and international tax expert with more than 20 years of experience in tax policy administration and applied research, and he leads and oversees research on domestic revenue mobilization across African countries, including work on taxation of high net worth individuals, extractive industry, illicit financial flows, and environmental taxes. And we are also joined by Zorka Milin. She's the policy director of the FACT Coalition, where she led work on international tax policy and financial transparency, and she has been working and had a lot of extensive experience in the intersection of policy, advocacy, and technical tax expertise. Before FACT, she spent nearly a decade at Global Witness, working on financial transparency and accountability, and she also taught at Georgetown and Yale universities. And last but not least, we have with us, and we have the pleasure to have with us to Matthew Caruana Galizia, who is the director of the Daphne Caruana Galizia Foundation. He previously worked at the International Consortium of Investigative Journalists, where he played a crucial role in investigations such as the Panama Papers and the Paradise Papers. So in 2018, he left the ESIG to focus on the ongoing case surrounding the killing of his mother, Daphne Caruana Galizia, who was assassinated in 2017 due to her investigations into corruption in Malta. So thank you so much to all of you for being with us. And in terms of the structure of the panel, I will make, first of all, a general question to all of you. So each of you will have around 3-4 minutes to respond to the question. And then I will make a second round of questions, which is more targeted for each of you. And hopefully we can have 10 minutes at the end for Q&A with the public. So yeah, with no further delay, first question to the panel is: how have CRS and beneficial ownership reform over the last decades actually changed government's ability to tackle tax evasion, and where do the limits still remain? So if we can start with you, Philip, please.
Thank you very much, and thank you for the invitation. I mean, I followed the entire day, so I have 3 minutes, so I'm not going to spend time in self-promotion of all the positive impacts of the CRS, because I found a lot of the interventions here already gave very convincing arguments as to why a lot of progress has been made. I should probably focus a bit more on what we see as still issues and maybe touch on some of the issues that were raised today and what we see as current priorities and more looking into the future. Some of you mentioned loopholes in the CRS, investment entities, We heard Jan with the presentation on the Isle of Man. And there's the active and passive entities, residence by investment schemes. This is currently still work that we are closely looking at. For residence by investment schemes, we have, as part of the revised CRS, introduced enhanced due diligence rules for account holders that are located in such countries that issue these residence by investment schemes. The other aspects, I mean, investment entities, it's a very, we have had lengthy debates about this when we developed the CRS. When we reviewed the CRS, we have not made changes so far because there are really pros and cons to each of the approaches. We are for the moment looking a bit at can this be solved through effective implementation, and here I think it is worth mentioning that maybe the important work that is being done by the colleagues of the Global Forum, who are actually currently, and I think Angela mentioned it already earlier today, they are over the past 2 years they have been doing a lot of work on reviewing whether countries have effectively implemented the CRS and whether this is about whether they have proper enforcement mechanisms, also with a focus on do they have mechanisms to have these investment entities on their radar screen. So we will wait also for the outcome of that to see what to do with those loopholes. Maybe an important aspect too is that there is still work on geographical expansion of the implementation of the CRS, and we're thinking mainly here at developing countries, and this is again an area where the Global Forum is very active with technical assistance, and I think recently also with success. We have now, I think, of the 129 committed jurisdictions, 54 are developing countries, 41 are already exchanging, and that includes countries like Kenya, Uganda, Rwanda that have started exchanging this year. But this is a work of is a marathon. It's for all countries, by the way. This is a marathon. This is not a sprint, and it's a process of continuous improvement. We are also working, of course, on the things that have been mentioned here, crypto assets, the young rich people versus the old rich people. And here we have adopted the Kerfs. This year starts with the collection of information amongst the first 48 jurisdictions. The Global Forum has again put in place a process to make sure that all countries that host material service providers in this area are committing to this standard. And more recently, we have then also focused on real estate, maybe a bit less ambitious. This is not a standard, in the sense it's a voluntary framework for countries to join. We have so far 26 countries that have joined this or that have committed to join it, but we hope that there will be more following shortly. And then perhaps if we look a bit further into the future, what we see as direction of work is maybe not anymore the addition of new global standards, but more to also look into how we can improve the existing transparency, and in particular to the use of technology and moving to more real-time sharing of data, more precise data, also maybe use of digital identity to reduce the burdens for the intermediaries and to make sure the information is more accurate, so that we could move perhaps to a world, and that's maybe pie in the sky thinking, but to a world where there is a more proactive approach to compliance and not a reactive approach where basically you get bulk information on a yearly basis and tax authorities do then post factum checks, but where the information comes more quickly, is more precise, could maybe serve for pre-population of tax returns. I have maybe gone beyond the 3 minutes, but that's in a nutshell how we see the future challenges.
Thanks so much. Philip, let me turn to you, Ezera, now to your take.
For me? Okay, sorry. Thank you so much, and I really appreciate the invitation. So briefly, I need to explain in the context of Africa and in the context of the African Tax Administration Forum. The African Tax Administration Forum is an international organization of 45 African tax administrations, and we provide support to these countries or to this tax administration in capacity building and technical assistance, and also research support. So about the issue of transparency and especially looking at automatic exchange of information, I would like to say that there are only 6 countries so far in Africa which have implemented automatic exchange of information. So I think with this background, you can see the challenge that Africa has. So firstly, I would like to say, based on that, it's I gave here an analogy of installing a security camera system, but it's not covering all the houses. So for example, out of 45 member countries, only 6 have implemented automatic exchange of information. And why? Firstly, it is very costly. The infrastructure that is required to implement automatic exchange of information is very costly. And so many African countries have not been able. Secondly, we don't have the capacity. So we still are training people in exchange of information so that they understand what it is. ATAF has helped so many countries so far to set up the units. But again, you would see that there is still shortage in terms of the staff complements. Most of the exchange of information units that we have established have maybe 1 person manning the unit or only 2. That speaks also to resource constraints. And those are the real challenges that are affecting Africa. Now, getting to the other challenge that we have in Africa, which I called the twin challenge, we have at the bottom an informal sector, which is very hard to register. We can't identify the players in the informal sector. Some of them are so small. But at the top, we have also people with wealth, but they're involved in complex transactions, which is very difficult to get them. So we have tax administrations which are using big hooks to fish the very small fish, and they can't catch them. Then they are using very small hooks to fish the big fish, and then the big fish run away with the small hooks, so they don't affect them. Here I'm talking about the political context of Africa. Some of the people who are rich are actually the politicians, and they have wealth in different jurisdictions. But again, it is difficult to get that wealth. And some of them, from the past studies that we have been doing, we have done a study on taxation of high net worth individuals across some of our member countries. And our findings that we had are so quite interesting, because in some countries you find out that the politicians are actually involved in stifling the rules or the laws that result in transparency, that result in data sharing or data. They've implemented many countries data protection laws, but you'd see that the idea is mainly not to protect the people, but also to protect themselves. And so what we can say, yes, we have benefited from transparency, but the challenge again that we've been seeing in Africa, even for those countries that are involved in exchange of information, the data or the information that they are receiving sometimes is not complete. It is incomplete information. If information comes with the name of the person, but it does not have the taxpayer identity number, it is very difficult for the tax administration to make use of that information. And in some cases, the information, like I said, we have very small teams manning the unit, so it will be also very difficult now to really look into the whole broad aspect of the situation. The other factor that we saw when we did the high net worth study was for those beneficial owners, it was very difficult for some tax administrations to really say who is the owner of this company, especially when it comes to companies. There are companies that if you go to the registrar of companies, the people who are registered as the owners of the companies or the shareholders are not the beneficial owners. They are in some tax administrations laws that give the public officer the right to go and register. But the public officer may not be the beneficial owner. So if you just rely on what is at the registrar of companies, it will not give you proper information. You need to sift it through. You need to look at who exactly is the owner. You need to identify them with their taxpayer identity number. And for many of the tax administrations in Africa, they have not yet implemented that. It's only recently when we did the study on high net worth individuals, and we are now coming up with a practical guide on taxing these people. And then we are suggesting how they can deal with this issue. And then maybe lastly, we also have the challenge of, apart from this issue of beneficial registers, exchange of information, the major challenge also in Africa is trade mispricing. The major challenge is illicit financial flows due to trade mispricing. You see that imports and exports are priced different. So what is happening, we have done studies on illicit financial flows, and we have also relied on some other studies in the literature. They are basically saying Africa is losing about 80 million billion USD annually due to trade mispricing. So our problem is not only transparency, but it is also the weak system where most of the resources are going abroad through illicit financial flows. So let me stop here to give others an opportunity.
Thank you. Okay, I'm here to give the U.S. perspective. So as I was joking with some of you, it's kind of the bête noire in the world these days, but obviously I'm not speaking for the U.S. government. On this question that you posed, CRS and beneficial ownership, if I get into that. But on CRS, obviously, as everybody here knows, the U.S. is not a part of it. Maybe we can say it deserves some credit for introducing FATCA, which is what sort of motivated and instigated CRS. FATCA, it's a law that I personally have a soft spot for because, well, first of all, it's kind of a catchy and funny acronym, and there's one thing that Americans are good at. We have good tax acronyms. So there's FATCA for fat cats and GUILTY for tax dodging corporations, and so on. And also, FATCA was sort of my portal into the world of international tax when I was a young tax lawyer. Very, very young, a baby tax lawyer, and FATCA was just coming online. That was kind of how I got interested in these issues. But the main reason is it has been effective. And we know that thanks to fantastic research by folks here, Gabriel and others from the EU Tax Observatory. We know that FATCA has had an impact and has helped to reduce deposits by U.S. citizens in offshore tax havens and has helped to reduce offshore tax evasion. Of course, it's not perfect, and we still see violations, in some cases brazen violations, which are often come to light thanks to whistleblowers. So, the compliance is far from perfect here. We also see what I find interesting, kind of troubling, is that we see repeat offenders. I mean, Credit Suisse was sort of caught red-handed in 2014, and then they pled guilty, and then just last year they kind of pled guilty again. So that suggests that maybe it hasn't been quite enough of a deterrent. Even if it has been effective, it hasn't kind of been as effective as it could be. And I think the reason for that is that the IRS, U.S. Tax Authority, hasn't been fast enough and hasn't been kind of tough enough in how it's enforcing FATCA. So there is an estimate from U.S. Treasury that the U.S. has missed on more than $3 billion in fines under FATCA, only because it was too slow to, to kind of catch and do the matching, because without going into technical details, but there is the statute of limitations, which is quite short. So they just haven't been on the case. And importantly, that estimate is from a few years ago, from 2022. So, I think it's quite likely that things have only gone downhill since then, given the very drastic cuts recently under the current administration that we've seen to the IRS. And that actually brings me to what I kind of see as, in the U.S. context, is my biggest concern, is actually these enforcement cuts, because while transparency is very important, and we are strong advocates of transparency, we also have to make sure that the tax authorities are properly resourced. And unfortunately, that is now a question that we have to worry about in the U.S., where there's been just kind of repeated budget cuts and kind of a brain drain at all levels of the agencies. And in some cases, even experienced tax agents being redeployed to do immigration enforcement on the street. I mean, it sounds incredible, but I've actually seen that myself in Washington. So, I think that is, from the U.S. perspective, that is the biggest concern that I have. That we could see quite a dramatic retreat from the historic role that the U.S. has had. And beyond just tax, it's more generally, and the U.S. has been kind of a bit of a, global sheriff on corruption and other financial crimes, if you will, for better or worse. And I think that retreat is not good news for anybody except for financial criminals. So I think that's a big concern.
Thank you. I almost forgot the question. Has my life improved since policies have changed? I mean, somewhat. On the one hand, I first started working on offshore tax havens in 2013. I was working as a software engineer for a newspaper, and one of my colleagues sort of handed me a hard drive and told me, here's loads of data from this offshore services firm operating in Singapore, and we need to figure out how to reverse engineer it and see who owns the companies that are stored in that database. And that, at first I was completely lost, because it was a world I knew absolutely nothing about. And there was very little public discussion. It was a very kind of niche topic. But we managed to do this. We reverse engineered this database, and the story was published April 2013. It was a big international effort. It had a big impact, and after that, my team kind of became known for these kinds of leaks, and that one led to the Luxembourg paper, Luxembourg leaks, and then after that, the Panama Papers, and then the Paradise Papers, and so on. So this was really like my day-to-day work for 5 years or so. And it is also the work that led to the assassination of my mother. because while tax is, it was important for us to look into the tax aspect of of the tax havens we were investigating. Given that I was working for a group of journalists, they were of course more interested in the more salacious stuff to do with corruption, which is all very well. I mean, it's super interesting stuff and really important. But it just so happened that that data contained a lot of very important evidence about a high-level corruption scheme in Malta that was going on at that very moment. So every day I was receiving new data from the source, and it was as though I could look into the minds of the people who were operating these corruption schemes, because every day there were new emails, new documents, and I was getting a sort of live window into what they were doing and how they were constructing these schemes and so on, which was incredible. I mean, it really blew my mind. But it also showed me how cheap and easy it is to do this kind of stuff. Just a few $1,000s and you can get your offshore setup. The one thing I'm really happy about is that our work was not in vain. The net result was, I believe, stronger anti-money laundering directives were pushed forward by the European Union and accepted by member states, kind of on the back of the public outrage that came out as a result of that was produced as a result of our reporting. So that is something I'm obviously really happy with. Even though I'm not so much looking at the broad aspects of taxation, I understand that these systems overlap. The same mechanisms that are created for tax evasion are used by corruption. There's almost a complete perfect congruence. So from that perspective, I was really, I felt really motivated with what we were doing. And uncovering the beneficial owners of companies in the European Union and a handful of other states outside of it has become easier, but this has not made our anti-corruption work that much easier. I think it has improved the lives of tax collectors, for sure, given what I'm hearing here. And it has made it easier for journalists to uncover certain kinds of abuse that may not necessarily be illegal. For example, that a prince from the United Arab Emirates is one of the EU's largest beneficiaries of agricultural subsidies through companies owned in the Czech Republic. This is something that perhaps we would not have been able to uncover earlier. But now we can. And even though we had a decision that I didn't like by the European Court of Justice, restricting the availability of data, fine, I respect it, but the court clarified that journalists should have access to beneficial ownership data. And finally, the company registry of my country, Malta, agreed to open up their beneficial ownership registry to journalists. The advantage of that is that the Maltese registry, like some others, operates a very high quality beneficial ownership registry, unlike the one of the United Kingdom, for example, which is open to everyone, but is extremely poor quality. There's one poor little person at company's house, I imagine, kind of in a basement, just rubber stamping everything that comes in. I mean, if you're interested in this, a really good person to follow is Graham Barrow. He's constantly exposing how ridiculous this system is in the United Kingdom, and he does it in a very entertaining way. But I also appreciate through my work that it's also a bit of a prisoner's dilemma. Unless all countries agree to operating by these same rules, then we're always going to play this game of catch-up. I agree that it's a marathon, but while we're running this marathon, we have to focus on the places, the countries that are the worst offenders, that are the biggest nexuses, concentrate the most abuse, and then I think that will take us many, many, many steps further. To my mind, I mean, the United Arab Emirates comes to mind very easily, because I have a personal involvement in my mother's case. Literally unmasking the murderer depended on unmasking the beneficial owner of a company incorporated in Ajman, which is an emirate in the UAE. This was extremely difficult. I mean, I went there in person, managed to make my way into the building by tricking the security guard. I mean, this is the kind of things that you had. This is the kind of thing that you have to do in order to uncover ownership there. And this was just one company in one offshore-free zone. The United Arab Emirates operates, I think, more than 40 or between 30 and 40 offshore-free zones, each one with their own company registry. They probably do happen to have high-quality beneficial ownership data because the system is so secretive that I suspect many of the owners of the companies don't bother using nominees. And that was the case. I mean, we were quite lucky in this company that we were trying to uncover the owner of, who, as it turned out, the person now facing trial for my mother's assassination owned. His name was there on the company registration document. But it involved a huge effort uncovering the owner of this company. We worked on it together with Thomson Reuters, and one of the senior managers there confided to me that they spent €500,000 on that investigation alone, uncovering the single owner of the single company. That's the amount of effort that it took, never mind all of the other stuff that I had to do in the background. So it's probably going to take another leak that is going to have to come out of these offshore-free zones to convince people, to convince policymakers that these are places that we really need to focus on. Until then, I feel like no one is really paying that much attention, even though it's very widely known that these offshore-free zones are being used to literally bleed continents dry. Never mind all of the corruption that they are involved in, the human trafficking, the warlords who extract ransom from migrants and refugees in North Africa. I mean, they all have bank accounts in the United Arab Emirates, and that is where the ransom payments go. So to me, it's a bit of a no-brainer. Let's focus on that area and we'll solve many problems at once and uncover a lot of wrongdoing at once. In the Indian elite, again, the residence by investment scheme of the UAE is a massively important utility for tax evasion. They operate a very the UAE operates a very cheap and efficient residence by investment system. Just rent an apartment or buy an apartment over a certain number of square meters and you become tax resident there. There are some leaks that have come out of there, but not enough. Not enough.
Well, thank you very much, all of you, for your insightful interventions. I'm very mindful of the time. We have 20 minutes to finish the panel. So let me go through a second round of quick questions for each of you. If you can keep 3 minutes for each, would be amazing, so we can have at least 2 questions from the public too. And I want to start again with you, Philip. This question is more on data access, because despite this kind of broader interest and support from the public to tackle tax evasion, data is still very limited in terms of CRS information or beneficial ownership information. So they kind of remain very restricted. So I wanted to ask you why this public access is still very limited, and if there you see any scope for greater transparency in this regard. And I also wanted to briefly follow up with you. You mentioned the real estate and crypto, something that the OECD guidelines have been working on in the past months and the past years. How confident are you that those frameworks can sort of close those gaps in those areas. And if you can briefly explain the difference between those frameworks and the CRS original framework. Thanks.
Thank you. Maybe on the first question, I saw already Jean smiling when this came, so I know where this question comes from. I will not talk maybe too much to the access to beneficial ownership information, but more about the availability of statistical data about the CRS. And I have to start by saying I really appreciate all the work that is being done by the academic world to assess the impact of the CRS and to identify issues. It is really valuable to us. Personally, I also appreciate that there are always executive summaries in there so that lawyers do not need to understand these mathematical formulas to understand what is in there. And of course, to do that, you need to have access to statistical data. And this has always been a bit difficult. And the reason behind this is that these exchanges, they happen on the basis of a multilateral convention, which has a very strict confidentiality provision. The confidentiality provision is not limited to taxpayer-specific information. And if you then look at the group of the CRS implementing countries, it's a large group. And some of these countries take a very strict approach to this, and others maybe less so, but they then are concerned that if they share the data, that these more strict countries consider this a violation of the treaty and therefore stop exchanging information. We have tried a couple of years ago to bring some more, or to entangle this a bit and to bring a bit more clarity, and we have achieved at least some clarity to the extent that we have amended the commentary to Article 26 of the Model Convention, which is a mirror provision of, it's a similar provision as the one on the basis of which CRS exchanges happen, and have come to an agreement that it does permit disclosing, the confidentiality provision does permit disclosing confidential information, statistical data, as long as it's not taxpayer specific, with some conditions. There needs to be some consultation taking place between sending and receiving countries, but the principle has been accepted, and I can tell you I've been working for 15 years at the OECD. To get that note agreed was the hardest one I have ever had to do, with many, many iterations. So that we have, and what we have also tried to do is to invite you more to our meetings of the working parties, so that the delegates also hear directly from you what the value is of sharing statistics. And so we hope that that helps too, for them to take a bit more of a flexible position. So then, on your question about the CARF and real estate, and how does it, how confident am I, and how does it compare to the CRS? I think the CARF is very comparable to the CRS. It is like the CRS for crypto. So in the sense that it's an international standard, there is a global forum process. Countries that are relevant in this space are identified. They are asked to commit, so there is not the risk of service providers moving from one country to the other. In that sense, I feel relatively confident. I think also the country pickup is good. I think there were 81 countries asked to commit, and there are 76 that have already done so. The US is part of that, also very important, because it's, well, better late than never. They are an important country when it comes to crypto assets. Probably the challenge on the crypto side is that the crypto world is very, very different from the traditional financial sector. Yeah. Thank you. That this is a so fast evolving sector, and we are a slow tanker if you need to get agreement on on these standards. And so one thing that we certainly need to keep an eye on very closely is the phenomenon of DeFi, decentralized finance, decentralized exchanges, because who is the third party that can do reporting? So, but on crypto, I'm relatively confident. On real estate, this is not of the same level of. This is not an international standard. It's a voluntary framework. It's also an exchange of information on of readily available information. So it is less ambitious, and it reflects the reality that there was not a political agreement, consensus that this should become a standard. So I think this will go slower. We'll have to see, and the idea is we need to bring as many countries as possible in the bath, so that then we can convince the remaining hardliners to join. But that will take more time, I think.
Thanks very much, Philip. Now to you, Ezera. I mean, you mentioned before that all these 6 countries in Africa have adopted the standard. You also mentioned that tax administration sort of still struggle to gain full access and sort of effective access to exchange information. And you mentioned some barriers for that to happen. You mentioned that it's costly. You mentioned also the issue of capacity, among other stuff. Do you have in mind any other sort of structural barrier for that to happen? That's one question. And also, if you can tell us a little bit on the role of ATAF in trying to redesign the architecture of transparency in order to make it more equitable for developing countries. Thank you.
Thank you very much. I will start with the second. So ATAF is, like I said, providing support to member countries. And let me also say that we are supported also by the OECD, actually, in providing support to countries. We have an official from OECD who is seated at ATAF to also provide support, especially in this issue of exchange of information. But I also wanted to say one way we have been working with support from the World Bank is to try to develop a platform which is more accessible and cheaper for our African tax administration to exchange information. And we are doing that with one of our tax administrators, the Zambia Revenue Authority. So we hope if that works, that will give more countries access to a platform that they can share information. And that will resolve that challenge that I was saying. It's costly to come up with the infrastructure that is required to share information. So that is going to be a huge milestone for ATAF if we manage to have more countries join that platform to be exchanging information. And then the challenges that we are experiencing, I said before, the data sometimes obtained is gotten, but it's not complete. Sometimes it is incomplete. Sometimes it is huge and it requires special skills to analyze. And like I pointed out earlier, that we have just started, most of our tax administrations have just started developing. The laws are there, but the units themselves, they are not yet fully capacitated. There are still very few officers manning them. And so I think as a way forward, it would be good if the data that is being shared is complete, is coming with text numbers, it's coming in standardized formats, and we have support to train our officials. I also mentioned that when we did the study on taxation of high net worth individuals, I must say that, for example, one country in Kenya, they actually managed to expand the register through the information that they got or obtained through the exchange of information. So that shows that it is really working well. And for countries that are more advanced in the area, like Mauritius, they are doing very well in terms of implementing the exchange of information for positive reasons. But yeah, we still need to verify, especially the registers. Like I mentioned earlier, that in the study that we did in several countries where we went, you could see that the company register, yes, information on owners of the companies, but when you dig through, you see that they are not actually the beneficial owners. And I think it's a gap that should be addressed. It's not only about sharing the information, but it's about looking at the information and trying to see how is this information, how accurate is it? I think that's what we can do. Let me maybe say the real test for Africa is whether transparency leads to audits. It leads to tax collected. It leads to challenges in behavior. And so it is not only how many laws or registers exist, but what we derive from those. So what I can say, we as Africa, we are not asking for weaker rules. We are not asking for weaker transparency measures, but we are asking for transparency that works, where capacity is tight and the stakes are high. Thank you.
Thank you so much. And I want to turn it into the US case again, Zorka, because you mentioned before that the US has not joined the CRS. Instead, it relies on the FATCA framework. So if you can explain a little bit the reasons behind that decision, more from a political and institutional point of view, and what would it take to move to a more balanced and reciprocal international tax mechanism? Thanks.
Thank you. Well, this is a softball, easy question. No, thank you for the question. I mean, look, U.S. unilateralism is nothing new when it comes to tax issues, and I'm certainly not here to apologize for it. As I said, I'm not speaking for the U.S. government, certainly no way. But, you know, this is just a fact, and it's true that often this unilateralism, we can say, it has been kind of constructive in that, you know, U.S. is the first mover, whether it's FATCA or guilty, and then the policy kind of goes global, and that seems good. But the problem is that when the U.S. is not a part of the globally agreed standard, there's a risk that it can turn into a tax haven for foreign tax sheets, basically, if the information is not flowing both ways. So that's the risk. And you know, look, in my view, I think we should be, the U.S. should be reciprocal. And the reason I say that, you know, look, it's not just to be kind of nice and help other countries, and it's the right thing to do, but also because you know, it is in the U.S. self-interest, and this is what needs to change. When you ask me what needs to, I think the U.S. kind of needs to recognize that and we actually had that under the previous administration. We had this idea that it is in the U.S. interest to be reciprocal. There was, you know, a policy proposal from U.S. Treasury. Now, of course, it's kind of very different. You know, the current administration is kind of operating through retaliatory threats to get its way and so on. So it's just a very different environment. And I just look, I'll be blunt, and also just in the interest of time, I mean, what needs to change? I think politically, things need to change. So that's the kind of short answer here. But I think maybe there is hope and some opening and silver lining with this Kerfs, as Philip was saying, and maybe that, you know, clearly even the Trump administration sees some interest in being a part of Kerfs, better off rather than being outside of it. And so, you know, I'm just these days you're always looking for silver linings, so I think that is one.
Thank you. Thanks so much, Zorka. Last question for you, Matthew. But you were mentioning before in your presentation and the first round that the way in which the current transparency framework has been supporting the work of journalists and how that has been changing over the past years. But also wanted to ask you to what extent the work of journalists still kind of rely and is dependent on leaks and informal sources on the one hand, and also what concrete changes do you see that could be implemented to improve the ability of journalists to scrutinize wealth and ownership structures in the ways to come? Thanks.
Thank you for that question. Our work is still very much dependent on leaks to expose new stuff. While open data is very useful when it comes to corroborating information, we're always trying to push the envelope somewhat. And for that we do depend on leaks. And fine, that's our job. Academics and politicians and intelligence agents don't have the same protections at law that are applicable to journalists on protection of sources and so on. So that is our role. It has been established by case law as well. It may never change, or neither should it change. But one thing that would be really effective is to support journalists doing work in tax havens, in those same offshore tax havens. This increases the chances of us getting valuable leaks and getting valuable information, and really supports the work that they are doing on corruption. These are often people doing work with very little to no funding, and in some offshore tax havens there is simply no journalism being done at all. So this would be a really effective step that can be taken, I mean, with development aid and so on. I was personally involved in developing such a project in Cyprus and occupied Cyprus. Unfortunately, it was supported by USAID, and the funding was cut almost immediately. The good news is that other funders stepped in, and the project continues. But it's really crucial that happens. Otherwise, this information simply doesn't get reported. And in the end, the data that is published from the leaks becomes massively important to academic work when it comes to studying the effects of policy on company incorporations and deregistrations and so on over long periods. Thank you.
Thank you very much to all of you. Do we have space for one or two questions from the public for Q&A? Yeah. Thanks.
A really fascinating panel. I guess a question, I mean, in principle for all the panel, but I guess mainly for Mr. Galizia. There's many tax researchers in the room that have thought about this huge question, and I wonder if you've built an intuition for it in your experience with the leaks, but to what extent do you view motivations for engaging in, I guess, secret usage of tax havens as tax motivated versus non-tax crime motivated? Or are they, to what extent are they non-separable?
What I can say definitely, because we looked extensively into this, is that the reasons given for the use of tax havens, the public justifications, are not corroborated by the actual evidence, do not match the actual evidence. So the explanation we hear over and over and over and over again is, I need to use secrecy havens for the safety of my family. I need to use it for business privacy reasons. But when they are explaining to their accountants or to the money managers and so on, these are not the reasons that are given. Ever. We couldn't, in all of the Panama Papers, we could not find a single case where anyone ever gave such a reason privately to the lawyers who were taking care of the company incorporation. And even when it comes to other schemes, like Malta's sale of passport scheme, again, this was not a reason that was ever given. The reasons were all like, I love the weather in Malta, which is of course equally bogus, but they just don't want to put on record that they're committing tax crime, obviously. But it's definitely not the safety reason or whatever, which is often stated publicly by a lot of these firms and banks that have vested interests. With the division between sort of tax-related stuff and corruption-related stuff, or like drug crime and so on, most of what I looked at personally is the serious crime and serious non-tax fraud. That's what I looked at, so I have a kind of bias towards it. But when other people, specifically the units that were established by criminal investigators within EU members, for example, the Bundeskriminalamt in Germany, when they looked at the same data which was provided to them by the source, they found, yes, there was an overwhelming evidence of tax crime. And when you look at the numbers that are published by ICIJ, with the data on what was recovered as reported by EU member states, most of it is from tax evasion, not corruption. The vast majority is tax evasion.
So one thing that's often not talked about is that a lot of the effectiveness of tax information exchange sits on a bedrock of anti-money laundering regulation, because banks and financial institutions have to know who their customers are, who their customers are, and that's the information they use for doing due diligence for CRS. We have reasons to be optimistic about CARF, but at the same time, over the last 6 months, we've heard a lot of information about how exchanges, particularly US regulated exchanges, are kind of ignoring the rules with regards to due diligence. How do we think about the effectiveness of something like CARF in a world where its implementation may be unevenly enforced in different jurisdictions? For anyone who wants to take it.
Yeah, there is certainly an issue that when you look at the crypto world, the application of AML rules is still very different in different jurisdictions. But I think this will evolve. It's a matter of time, at least for centralized exchanges. When we started looking at developing something like the CARF, it was already a very different world than what it is now in terms of regulation. So I do think it's just a matter of time.
I just wanted to say for Africa, actually, exchanging banking information is still a challenge. And I think there are only 1 or 2 countries that have laws that they can exchange banking information, especially bulk banking transactions. Most of the countries have laws to exchange information on a one or case-by-case basis, but it's not very useful when you want to do audits. And I think one of the guidance we have been giving, or we are giving the countries in the guide on taxation of high net worth individual, is to come up with these laws that will be able to exchange banking information. And we have also a section that we have talked about cryptocurrency in that. Thank you.
I'm really glad that you asked this question. I think you kind of hit on something really important. And look, I know this is a room full of tax economists, but it's important to also bring in a bit of kind of political economy here. This issue of crypto kind of AML regulation is very, very live in Washington at the moment. And crypto is right now the most politically powerful industry, more so than Wall Street or big oil or other big business lobbyists. So it's all kind of coming to a head. And the fact is that the industry has been flaunting even the minimal AML rules that they have, and now there's kind of an effort to introduce more. So, you know, I think that this is really challenging. This is really, and that this kind of political economy dimension is important. You know, the U.S., as I kind of mentioned earlier, has traditionally been very strong on enforcement, even if the rules, you know, we can discuss the rules, but at least such as they were, the rules were enforced very strongly with hefty fines when, you know, those who violate them are caught red-handed. And so now that we have reason to question that, I think that it's really important for other countries to maybe try and kind of step up a bit more to fill this gap. And yeah, but I mean, the expectations from CARF are high, so I hope we can live up to that.